Well, interest rates were starting to look really good as we started April, and then boom, we had to have a global thermonuclear tariff battle, which has really shaken up the markets and made interest rates spike. So let's look at where we are on mortgage rates and what's driving that. So we're now over 7% again. This is where we were in February. They had gotten down to about 6.6. And again, mortgage rates jump back above 7%. Here's what it looks like in just the last week. So this is at the beginning of February. And again, we peaked in February. We kind of started the year at above 7. It was sluggish, kind of created anemic January and February sales. But then as we got into late February, we saw the rates really kind of come down and they started to get better. And we were kind of hugging around that 6.75 mark. And then they dropped again as we started April, and we got down to 6.6. This was just April 4th, a few weeks ago, or even a week and a half ago. And then you can see, bam, this huge spike right at the end. And that was the announcement of the major tariffs. And then as a second leg of that, the bond market. So right now we're over 7% on mortgages, and it is all driven by the 10-year treasury. This is in real time. So this is the 10-year treasury market. You should be watching this daily if you are actively buying right now. This will tell you which direction mortgage rates are going to go. Not necessarily what the rate will be, but which way they're going to go. We're about 4.4. We had gotten the 10-year treasury down below 4 a few weeks ago, maybe even the beginning of last week before all the announcements. But anyways, now it's spiked up. I think it was last week or within the last week, there was a big flight out of the bond market. And when people get out of bonds, meaning they're selling more than they're buying, it makes the yield spike up to attract people to buy them. And so anyways, it's been wild. Watch that. I'm hoping it'll start to calm this week. That would definitely help out mortgage rates. Pay attention to that because I think that's going to be the underlying story. Really, that's going to impact housing more, at least in the short term, than anything that happens with the tariffs. It's going to be how the cost of capital, borrowing that money. All right, let's look at March data. So this came in from Austin Title. So if you can see this chart, I know it's small, but the red line is 2025 and the other lines are the past 4 years. And so clearly we've had fewer numbers of sales than we've had the past 4 years. So a little anemic there, but you are starting to see the spring bounce take place. If I look at March, on this data, the average sales price was up about 2.9%. The median sales price down just 0.5%. So the market's fairly stable in that sense. What we do have is more inventory. Now, this was the week, and I know it's hard to read, March 30th through April 5th. So new listings were up that week. This was just a few weeks ago. Sold listings were up 15%. So again, here comes that spring bounce. Better than last year. Current months of inventory about a month higher, sitting about 5 months of total inventory. Median sales price about $430,000. So still hanging in that 425 to 450 range. This is one more note as well, and this kind of has to do with the first quarter, which I talked about. We had a little higher rates than we did at the beginning of last year. So total sales were down about 8.8%. The average sales price was only down 1%, and the median sales price was down 3%. So still, if you take that first quarter, a little anemic over last year. And then finally, active and pending data. Right now, we have 14,000 homes for sale. Last year at this time, we had 11,600. So we continue to see the number of sellers, the number of properties for sale climb, while sales themselves are still kind of anemic and not going as fast. All right, let's look at the heat map because things are starting to change. So what is this? We're going to look at a couple different data points. So this one is March over last year. So March this year over last year, what the median price changed by zip code. And so just to give you some bearings, this is core Austin down here. And then you've got 183 corridor going this way. You got the 290 corridor going out towards Dripping Springs this way. And I've said it in the past several videos. We've really started to feel the market kind of go into some different pods. So if you look at where the warmer, if I look going southwest, and northwest. That's typically your middle, upper middle class zones. So if I look at the really orange spots, this is Lakeway. That means their median price change was up 30%. I know that's a little aggressive. That probably has to do with just not as many sales. But just know, where are people paying a little more this year than last year? You're looking at Lakeway, you're looking at Westlake, you're looking at Mueller, maybe Crestview, Brentwood, Rosedale, and Core Austin. You're looking down near Dripping Springs, maybe Driftwood, Southwest Austin, and Northwest Austin. So again, think of those folks in kind of that upper middle class price range. This is number of sales, totally different than price. Just, are there more sales or less sales? This map looks a little different. Some of those areas I just mentioned, Lakeway is blue. Blue means less than last year. Westlake, less than last year. Most of Southwest Austin, less than last year. Same with North. So there's fewer sales. There's just higher prices. And so anyways, that I found was kind of interesting. Mueller, Colt. So really all those places I said that have the prices going up, there's actually fewer sales. So I don't know how to read that totally. Some of that just can be timing. But anyways, interesting to see that. But ultimately, I think right now what we're seeing is that kind of, upper middle class price point, maybe good middle class to early luxury price. Those are the ones that, in my opinion, are selling the strongest right now. Here's real-time data. This is number of active versus sold listings, and nothing special here. We're seeing those listings really spike as we get into April. We are starting to see blue as sales, and they're starting to trend up, but there's a huge gap between the number of active listings and the number of sales per month. Here's the original price versus the sold price. And again, this is not one house, right? So this is just the market. And again, we're seeing list prices go up. We're seeing closed prices go up. Very similar to what we saw in the last chart. And finally, our long-term historical sales price trend. This is going all the way back to 2015. And again, who are the, if you bought your house here in early 2021 or earlier, you're probably doing fine. You have equity. The market's gone up nicely. If you bought it in 2020, late 2021, 2022, maybe early 2023, those are the ones where most likely you could be underwater or your equity has come down. So we're watching that. The market could be stabilizing this year, but there's just too much up in the air with the interest rates and the tariffs and everything else to know how that's going to impact the local market as we get through the year. So keep an eye on that. Finally, here's some good news for Austin. So a lot of the major airlines are very bullish on Austin as we continue to expand. So here's just a rendering of what the airport will look like here in a few more years. They are working on a massive, multi-billion-dollar expansion. We're building a second terminal. Delta has stated in this article that they've doubled the amount of flights that they have out of Austin since 2019. And most importantly, what is a bigger airport going to do? It's going to get us more direct flights and more international flights. Right now, Austin doesn't have any Asian flights, for example. We just usually go to the West Coast first, and then you fly to Tokyo or Seoul or Singapore. But there could start to be direct flights from Austin to Asia, and there could be a few more to Europe as well. So pay attention to that. That's exciting if you like to travel. All right, if you are a seller right now, this is peak sales season. Ideally, we do have a lot of buyers out in the market. That's a good thing. This is when we're seeing a lot of buying activity, depending on your price point. You could have some decent traffic as well. I think because we have a record amount of inventory, it's more important than ever as a seller that your house shows really well to a buyer, because I can tell you, I saw over 30 properties with buyers this weekend. I spent a lot of time in the car, and no buyer is just going to look at your house. They are going to look at lots of houses before they make decisions, and they're not in a hurry to make a decision. So your house has to really stand out in their mind. If you're a buyer right now, the blessing is you have lots of inventory. There's a lot of choices for you, which is a good thing. Really, we want to pay close attention to interest rates and your financing, working with lenders, make sure that we are locked and loaded so you feel comfortable once we go under contract. Anyways, hope this information was valuable. Make sure to click that subscribe button if you're checking us out on YouTube. We will be posting videos each and every week. And of course, if you know somebody looking to buy, sell, invest, or finance in Austin. I'd love the opportunity to chat with them. Anyways, boy, I enjoyed the Masters. I hope you did too. That was a fun one. And we're going to have a nice warm week, a nice sunny week. And I'll talk to you next week. Thanks.